Welcome back to Primary Source China Investment. This is show U2. And if you can pull yourself away from the Olympics and the Super Bowl, we'd appreciate you spend a little bit of time with us. And peng.guo and I are ready to talk about a little bit of a political issue this week in terms of trade. And not to get too bogged down, but we wanted to discuss how global trade either gets bigger or smaller depending on geopolitical issues. And the first thing we want to recognize is China is the world's largest trading partner. I mean, this is not revolutionary. China's been the biggest exporter since 2009 and the world's biggest trading partner since 2013. In 2021, the trade surplus that China has ballooned to 676 billion as trade jumped 30% coming out of pandemic, or as a result of accelerating demand from during the pandemic. Specifically with the United States, the surplus, and that's one of the irritants behind the lingering US-China trade war, rose 25% to almost 400 billion. Exports to the US gained 27.5 over 2020. Chinese imports of American goods rose 33%. All of these numbers we're throwing at you doesn't really matter. The big number that matters is the trade surplus and the trade deficit. Surplus for China, deficit for the US. Interesting, the phase one trade deal that was signed, nothing was purchased. There was a huge shortfall in the amount that purchased. And we can talk about why. You know, the US says, well, China just didn't buy, and China says, well, you know, US had inflation. So there's a lot of nuance there. But the fact is, 200 million has gone missing from the phase one trade deal. So given the size and the scope, it's not hard to see how conflicts can arise. And in the last 18 months, China's either started or tried to end several such conflicts. The most recent is Lithuania. China suspended the import of beef, dairy, and alcohol from Lithuania without mentioning a specific reason. Allegedly, because Taiwan set up a rep office in the Lithuanian capital, and of course, the recognition of Taiwan is a core issue, core interest of China. And we've talked about that in the past. But interesting thing, Canada, Japan, and Taiwan joined that EU case. And Canada released a statement, something like, Canada opposes economic coercion and stands with like-minded partners in supporting a rules-based international trade. The point here is this word coercion. It's important because there's an Australian case that we'll want to get into. Remember, we've covered this before with Australia because China has thrown up a lot of gates in terms of Australian products and specifically wine. And Beijing vigorously defends their position and the WTO case is working through. If you're an Australian winemaker, you effectively got shut out. So who's been the biggest beneficiary? We talked about trade moving. So if trade in Australian wine shuts down, that doesn't mean demand goes away. So who's been the biggest beneficiary? Well, it turns out South African wine. And South African wine's had a huge uptick. And that's where the wine is going to come from. If it shuts down from Australia, there's going to be other suppliers. Now, what does that do if you're an Australian grower? Well, in the short term, you're really in deep trouble. And there was a 60 Minutes show about all this, and it got quite serious. But it turns out Australia has some solutions as well. So Australia is now, in 2021, Australia export is actually growing. I don't think it's at pre-pandemic levels, but it's growing. They're finding other markets for this. So the overall point, and not getting bogged down with the numbers too much, is that trade will find a way, A, demand doesn't necessarily go away, B, and C, if you're invested in companies that are in these businesses, you have to understand where those companies are finding their clients. And if you demand a huge amount of your sales to China, you may fall into one of these traps.
Yeah, that's a pretty good, great summary on the trade. I think in my understanding, trade looks like export in 2021, China export increased 29%. So the biggest increase is the medical related export, increase almost 100%. Others is probably around 10% to 20%, something like that. I know this is related to the pandemic. It's more like the short term. Trade is, in my understanding, is much more complex than we thought, just by the number, because China is really like the international market. In China, 25 industry, there are 21 dominated by the foreign company. They are the leading player in the 21 industry.
That's for sales in China.
It's really like for the in the sector, which company is the biggest player in this sector. So biggest player is really the foreign companies. So that's quite complicated. They're from the German, United States, Australia, or whatever international companies. But the export, the total number could be belongs to the China. So that's really China government obviously get a benefit if the big pie, the size of the big pie get increased. But people probably need to see what's the percentage increased for the each sectors. So that's really the pie, you can get it. And also the trade, the trade is pretty well in the last year, but the China stock market is not performance very well. And a few companies is I know it's get sold because their medical material get huge demanded in the international market. Yeah. But generally speaking, you will see that it's really not a benefit for the entire stock market. So there's a lot of reason behind that need to be get research. The third thing is trade is not necessarily is a good thing, and sometimes it causes the concern. Like a great example, like the mask related material and the equipment. So the international demand gets sold in a very short time, and you will see the China market is totally get messed. So all the related raw material get a price get a triple, 5 times or even 10 times get sold, and then after the demand dropped, and totally screw up the whole
everything get plummeted. Yeah, no profit. You can't make any money.
Yeah, that's a trigger very important things, and also we know the trade conflict between China and United States and other major economies. So that's the trigger the big things. A lot of the trade policies or negotiation or fight is really focused on the short term. But from the investment perspective, we really need looking for the long-term sustainable growth for the trade. So that's the area we should be focused on. Otherwise, any short-term growth, you probably can ignore it. You cannot increase the capacity to capture it, and also you cannot keep the pace with the market.
Yeah, that's a fantastic point, Peng. Most of these flare-ups have occurred because of the politics, not necessarily because of the trade. And if we look at the directionality of trade, trade continues to increase, and more trade between more countries. So even if you have a flare-up, Australian wine or Lithuanian beef or some other product, that's really a blip in the overall global trade. Now, that's not to minimize what happens if you're an Australian winemaker. That's going to be very bad in the short run for you. But these kind of flare-ups are happening more and more because of tying trade to policy. And we'd be naive not to point that out. I mean, it's pretty obvious that the Lithuanian case is because of the recognition of Taiwan. And that's a decision that Lithuania is going to make, and countries are free to make those decisions. So those kind of decisions do have consequences, and people are beginning to realize that those consequences will be seen in trade.
That's true. Yeah. That's probably trigger some advantages. So people really need to go deep to the sector or company level fundamental research to figure out what's the sustainable long term of the trade. And due to market volatility and the policies quickly change, you can see how quickly change for the different countries' policies. So that's probably trigger the opportunities to purchase or get the better investment opportunity with that. Like you said, demand, and as long as demand is there, the market is there.
That means companies are going to find themselves looking for other markets, and that again, that increases global trade. So if you're over reliant on the China market and you're a manufacturer in Europe or Latin America or the US, you're going to look for other markets. You're going to be forced to look for other markets because those are the things that you can control. You can't control the geopolitics.
Yeah, that's true.
So that brings us to the final piece of this, which is the largest trading partner, the second largest trading partner in the world, which is the United States. And the Biden administration has hinted that an Indo-Pacific strategy is going to be imminently released. It's not hard to forecast what's going to be in that. And there's going to be a lot of phrases like free and open, the liberal use of the word AUKUS and the Quad. And the US is already feeling the sting from this phase one trade agreements.
Yeah, I just hope you can reduce some of the volatility. Don't get a new change over the night. Don't surprise the market.
Well, I think those large US names that are manufacturing and distributing in China are rethinking a lot of those. They've been rethinking, it was a few years ago where, China is not going to be the workshop of the world and people are moving manufacturing. That was already happening because China is no longer the cheapest place to make things. So obviously, countries are going to change.
Yeah, that's right. So it's a kind of the long term. It's really from the long term perspective. So what kind of things that you can to choose? In the short term, obviously, you can say I open a new market. I set up the factory in a different place. But as nothing is like the free lunch. So you always deal with like the new things, new challenges. I think, as sooner or later, I believe the trade is like the ecosystem. And the really market will, people select their positions really based on the market, based on the needs in the long term.
Absolutely. And, a lot of these global brands, it's not the first time they've had to deal with this kind of stuff. So
That's true.
They have smart
headache.
Yeah, they have smart people on the ground. There's no doubt about it. Well, we're going to leave it there for you two. Thanks so much for tuning in. I would like to just give a shout out to the Cincinnati Bengals, Who Dey. Hopefully we'll see an upset on this afternoon Sunday game.
Thank you.